Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, January the 12th, 2022. The S&P did follow through this morning to the upside, and it felt very strong, and it felt great that the market was, I believed, heading towards 47, 48, 49 to 50, and on up as it continued in a 3 of 3 type move. The market did manage to get to 47.39 before we got caught in the first, which I thought was a pretty strong decline. And so what I believe is going on is that we remain within that third wave, and that's a minor third wave, and within that the minute third wave. So it is definitely a 3 of 3, and that it is also subdividing. So I believe that today's high at 47.39 completed that first wave 1 of 3. So here we have minute 1 of 3. So I should say wave 1 of 3 of 3 to be totally clear, right? We have minute 1, so that's 1 of 3. That's 2 of 3. This is 1 of 3 of 3. So this is subdividing in and of itself. And what I believe is now going on is that we're in a wave 2. I would like to see that wave 2 basically hold 46.98, and pretty much I'd like to see it hold above 46.87. Just doing a quick Fibonacci check would put us exactly there, 49.96. So coming down, giving a test to the 50-day moving average, the hourly 50 MA. And so right underneath that, we have that 46.87. So I think we can expect some little bit of follow through, additional follow through to the downside for a wave 2 of 3 of 3. And if that's the case, then my expectation from the market would be it turns and it rallies strongly, as we have already witnessed, but it's now within that 3 of 3 of 3. So it's at a maximum acceleration point, and in this case, it would be to the upside, not to the downside. Now that's if for this upside scenario, 46.98 to 46.96 needs to hold, and truly 46.87 should really put a limitation. And I'll let that go all the way down 46.83 to 46.87, right in there. But that's the area that I'm looking for it to hold, and that would complete a wave 2, and then this thing just takes off. That would be the key. And understanding, again, under Elliott, a third wave is the most powerful and the most, and often the longest. So putting that all together in the direction of where it's going up. This would be a third wave going up. It's in advance. So that means it needs to accelerate. It needs to go, not look back. Get above 47.39, 47.50, start heading up to 47.74, etc. Getting closer to that 4,800 level. That's what my expectations would be if the market is intent on rallying and continuing this current count. So it's a third wave, go. Now, if it breaks down and it breaks below 46.87, technically the no break zone is all the way down here at 46.27, because that's the low of wave 2. And if I'm now in another wave 2, and this is wave 1, this one, it can't break below 46.27 and still be a wave 2. That is the point where it would leave the 3 waves up, which I talked about last night. So now we've got a different level where it would need to break below here and still be then considered a wave 2. Okay, so it would be an ABC, and we're going to go down. Now, if that takes place, then yes, Expectations are for continued decline. 45.7125 becomes at risk and likely to break. And then we'd be looking at what are they all there? A break below 45.20. And actually, if I had to move this wave 2 down to here, 45.20 would need to hold. If 45.71 breaks, 45.20 needs to hold in order to keep this particular count, which took us to new highs, intact. Otherwise, it's going to be a strange count. So for the S&P, 45.20 has to hold, and basically all of this needs to hold for this count to stay alive. Otherwise, as we've discussed in the past, this minor wave 1 becomes a minor wave 5, and the intermediate wave 5 sits on top of it. If we come down and break 45.20, that remains the case. Because this pretty well counted and accepted as a 4. This is 5 waves up, and it did go to a new high. It could be the completion point. 45.71 would be the first line of defense not to break. Actually, 46.27 is the absolute first line. Then you have 45.71. Then you have 45.20. If it manages to hold, then we'll go with, this is a more complex corrective pattern. You know, in other words, this is an ABC, which I forgot to put there. And then this is an ABC X. And we're going to do another ABC, but it still would need to hold above 45.20. All right. So basically, I'm still lined up for this upside move. Basically, I think the market actually is still lined up for an upside move. They did sell it off, but now we're beginning to recover again. So CPI today, that's really what started to kick it back lower. And so we'll see. We'll see. We have both the upside, we have the downside. You've got these breakpoints. You have what expectations, so what to look for. If these levels hold, the market needs to take off. If it holds and just kind of goes sideways, that's too much indecision. And then I stop. I would likely stop looking for an upside and start thinking that they're going to come in and sell it. But we'll see. Follow the price action. Follow the moving averages. Again, the S&P on the daily. We take a quick look. Let's just go see what moving averages came into play today. If any, I believe it was the too much junk on this chart. It was the 50 was challenged yesterday, 2 days ago, succeeded. Oh, but we got up and got above the 8 and the 4 and then came back down. So on the daily, not too much threatening just yet, but 46.51 is where the 50 sits right now. And we're already looking at these lower levels and discussing 46.27 on below. So what would add to that low is a break below the daily 50 at 46.50. And if the daily closes below that level, it tosses a very negative into the pattern. But we're pretty far away from it, so the daily's still waiting, I'll say. And so here we have the 50, 46.98. And that's got to hold along with this, along with this. So we got three major, not major, but stronger levels. 46.98, we got 46.96, which is the 3A2, which fits if this is a wave 2, a wave 3 to blast. A break puts a question onto whether this is a wave 2, but we have to actually allow it to come all the way back to 46.27. A break below 4688 raises that probability a few notches. If it starts to break below all of this, then it's going to get tight. But it has to break to cancel it. So there's your levels once again. 4698 to 96, 4688 down to 81. And then these other levels should also contribute to holding it in a wave too. Don't misunderstand, but 4670, 4660, 4639, not that one, excuse me, these on the inside. So 4660 and then 4627. This one, it's actually resistance for the up move. So yes, resistance going up, support coming back down. But I tend to not think, I tend to think in terms of this wave here. And that's where it's got to hold. Okay, I'm going to leave it there. And tomorrow will happen. So just stay focused, stay in the now, continue to use the moving averages, and use the different Fibonacci levels as they relate to what is in progress, what the limitations have to be on that downside move, what the limitations are for accepting an upside move. And the next step that will be on Thursday, January the 13th.